Yo, what is good, family? Hope you all are having an amazing day. Let's kick it off with today's video. Basically, we have a beautiful setup on the Euro USD with the swing system from this last Thursday. We're gonna break everything down and show also the setups we had on the pound that kind of balanced out the massive win we had with the euro. So yeah, let's kick it off, guys. Basically, you guys have on the playlist in my channel two very important playlists. The first one is the M5R playlist. Over there you will have all the core concepts. How do I mark up the strategy? How do I mark up the structure? How do I manage the setups? Everything you need to know about my main approach to the market. And then you have the other playlist, which is H1R inside H4. That's basically the terminology for the swing system, and that's where I explain most of the setups that I have with the swing system on Bitcoin, Euro, and the pound. The core concept is the same in the M5R, and the swing system is the same. Now, a few things change, and after mastering M5R, I always recommend that you guys go over the swing system so you can learn how to apply that strategy with the M5R. Now, in this video, we're just gonna go over the setups, not over all the terminology, all the concepts. Hence why I'm recommending everyone to go and watch all those videos so you can really learn the concepts and the ins and outs of all the traits and the strategies. Now, let's kick it off, guys. Basically, the first step for the swing system, as you guys should know already, is to mark up the 4 hours range. And basically, this is something I was looking for during all this week, which was longing the euro. Why? Because we already did on the first candle of the week and basically first few candles on Monday. It was basically this bullish shift breaking this lower high, and that was already telling that market was changing the structure. Now let's mark up first of all the structure so you guys can see and have a hint on how I mark up the structure. Therefore, we can mark up this range eventually. This is basically the low, high. Now we can see that this candle is on the right. You can see that is 375. This candle is 377. Therefore, this high is higher than this high. Therefore, we have high, higher low. Now bearish candle first makes the high, then makes the low. Therefore, we have high, higher low, higher high, BOS, fake out, higher low, higher high. Now, just to show you, all right, because I do this without going to the lower time frames, but if you're new, you can always go to, if we are in the 4 hours right now, you can go to the 1 hour and verify if you did it right. And right here, we can see that it's perfectly fine. We have the higher high. It's a little bit misplaced because this is, for example, the opening of the 4 hours candle. That's why the, I mean, both dots are on the same level, but clearly this is the higher high, the BOS, the fake out, the higher low, and then eventually the higher high. So this is very cool because you can see that just by looking at the 4 hours, you can kind of see how the candles were built. And it's all by understanding the OHLC, open, high, low, close of the candles. As I said, you can see all of that on the playlist that I mentioned in the beginning of this video. Now, once you have the 4 hours range marked up, you basically throw a line H4 higher low. There you go, boom. And now the second step is to throw a fib from higher low to higher high. In this case, specifically because we are bullish. If it was a bearish range, you will throw the fib from lower high to lower low. And basically, you're going to mark up the 50%. All right, the 50% of your range is your equilibrium level. You want to see the price tapping into that 50% for you to then have the potential reversal. But if the market is not even tapping the 50%, you must wait until price taps the level. We had a very great example this exact same week. All right, without tapping the 50, market already did this bullish break of a structure. This was exactly at New York Open. Eventually, market dropped all the way to the downside to take this low and eventually tap the 50% of the fib, which was fantastic. Now, Once the market taps into the 50%, you're gonna mark up the structure. All right, the same way that we do on the M5 and the same way that we just did on the H4, we're gonna do it on the 1 hour once the market taps the 50%. But you're not gonna start once the market taps the 50%. Once the market taps the 50, you're gonna mark up the whole structure since the higher high. So you have everything marked up. And basically, we have high, low, lower high, lower low, lower high, and now this candle is very important, all right? This is 109 and this is also 109. So we have equal lows. Therefore, this is not a lower low, this is an equal low. The lower low actually is made right here, but we mark up the point of the lower low right here because then market reverses, all right? So the lower low is made right here, but extends itself until this point where eventually it stops going lower. So with this bullish movement, we create what? We create a bullish BOS. Eventually fakes out, as we said, and makes another lower low, then lower high. Why we have the lower high over there? Because this candle is not breaking previous candles low, and the following candles break the previous candle's low, right? So we can understand that this high is the lower high because from here market starts going lower again, exactly to make this lower low. Now, why is this a lower low? Because this is a lower high. Why is this a lower high? Because it's breaking previous candles high. All right, the movement right here is like this. Market moves down, then moves up, then moves down, then moves up, and then moves down. Fantastic. Now, lower low. Why? Because this is a lower high. Why? Because it's not breaking previous candles low, and from here it starts going lower to then make a lower low. Fantastic. Now, in this bearish range, we can also mark this up, and you must mark this up. High, low, lower high, lower low. Why? Bullish candle first makes the low and then makes the high. Fantastic. This is basically the build-up and how you must have everything marked up. Now, you're going to do this if you're starting, all right? Once you master the way to mark up the structure, you're not going to have all these points on the chart. Is useless. But in the beginning, it's extremely important that you learn to do this systematically. Obviously, eventually, after marking 1,000 dots, you will achieve unconscious competence and you will not need basically to have this in your chart. But in the beginning, it's extremely important, although it seems pointless. All right, it's super important. Now, all of this to just say that this is the last lower high. So we can remove everything. There we go. Fantastic. And now, for the reversal, the first point was H4 range, then 50% of the pullback, and then H1 reversal. To mark up the 1 hour reversal, we have to do what we just did, to mark up the structure. Now, once we have the last lower high, let's say we are right here. Okay. Well, if we are right here, for example, my level for the BOS will be this. Eventually, we see this build up. It's not breaking previous candle's low. Then, bullish candle. Then, make new lower low. So I will have alerts. And then I will move my BOS level to the next lower high. Now, for me to have a 1 hour reversal, it doesn't have to necessarily be on the last significant one. It can be on an internal level. Therefore, my real level for the BOS will be here. So what I will constantly look for is for the 1 hour candle to close above, all right, to close above the last lower high. With that being said, boom, next candle breaks and closes above, all right, above the level. Now, once we have the market closing above, the entry is officially confirmed. Now, one important thing, look at the time. All right, this is 2 a.m., 2 in the morning. This is Madrid time. But obviously, I'm not executing at 2 a.m. All right, I'm sleeping at this time, so I'm not able to do so. Therefore, I will always, first of all, first thing in the morning when I wake up around 7 a.m., a little bit earlier, I will always check the charts to see if some setup was confirmed during Asia. And when we get there, boom, 7 a.m. I will check which setups do I have pending, and if there is any setup that was active during Asia and is still around the level of entry on the open of my time window, I will take it straight away. If it's very high, I will just set up a buy limit. If it's very low, I will just set up a buy stop. All right, so basically if it's around the entry level, I will just take it straight away. Okay, and with that being said, it's pretty much like taking a trade on Asia, but at the perfect level of entry. All right, at the perfect level of entry, at the level that it should have been executed. Now with that being said, we have the entry covered. Fantastic. Let's go over the invalidation. The invalidation level, bullish BOS. So the invalidation goes at the lowest level of the BOS. Okay. Now, regarding the exits, officially the main level for the hierarchy is the higher high. It's always the higher high. Now, we will have different scenarios. If we have a 4 hours bullish range and then we have a bearish H4 PRP, the PRP is basically a kind of a small BOS. It will signal that we have a bearish reversal, but the main range is still bullish. This means that, let's say we have this, and then we have the 1 hour reversal. Our level of exit will be inside of this last bearish H4 internal bearish range. Okay? But if we don't have the PRP and we just have a pullback, we can have a bullish reversal in the 1 hour that our exit level will always be at the higher high. Okay? This is very important. So if we have more than a 1-to-1 risk to reward ratio at this higher high, we will keep the exit there. In this case, we had a 1 to 4.56, so that's amazing. Now for you to see the thing that I was talking about, in the 4 hours we just have 4 hours higher low that creates the higher high. Then yeah, we have the bearish structure, but there was no bearish BOS. It was only a bullish impulse and then a pullback. So the exit clearly is going to be at this higher high. We have more than a 1-to-1, so that's our exit level full volume. That was a pretty clean trade. I mean, we had a lot of bullish strength that was eventually exit on the next day. All right, it was 1 day and 15 hours open. So very nice. Now let's check the same thing but on GU, because on GU we also had a setup that was confirmed on Asia, but it was not an exit. All right, it was an invalidation. So I don't exactly remember the level. I don't know if it was this one or whatever. All right, it was this one, I guess. And basically this trade was confirmed at 5 a.m. also on Thursday. So basically the break and close was right here. When I wake up around 7, it was in negative, so you can place a buy stop at 8 a.m. It goes active. Your invalidation will be at this low, and the euro was a win, on the pound was a loss. But if the euro is more than a 1 to 4, I mean, you're more than good. Then eventually we had another setup on the pound that exact same day, which was again another loss. So look at the market. I mean, it literally just wicked out 2 times to then give you all the movement. So this is something that you will have to go through. All right, it's trading. Welcome to trading, my friend. But as long as you're following the system every single time the same way, you're gonna end up pretty well. As long as you are executing trades with systems that have positive expected value, you're more than good. So guys, with this being said, let's wrap it up. Remember that you have on the description of the video the link to my Instagram. You can ask to my DMs if we have available spots for the private group of students, and you will have access to all my intensive courses with all my strategies, also to the live analysis sessions that I do from Monday to Friday in English and Spanish, and also to the private app where I send all my market ideas regarding Forex and crypto. So with this being said, family, see you on the next videos. Let's get it.